Hi, I'm Mimika Cooney and welcome to Mimika TV, the place to build a brilliant business. Today we're talking about simple systems for financial freedom. Jen Turrell supports female entrepreneurs who take control of their money so it doesn't control them. Known as a financial personal trainer, Jen's passion and expertise is to help women in their money management struggles without needing a math degree. Her Mastering Money Matters monthly membership group focuses on taking steps to crush debt, build wealth 1 month at a time. Jen dove into the world of special needs finance and started running an early intervention program when her daughters were diagnosed with autism. Jen has found a system that works, designing and automating cash flow systems for home and business, just so she can continue being the busy mom that she is. So welcome, Jen. Welcome to Mimika TV. So glad to have you here.
Thank you so much for having me.
Well, it's always great to speak to other, really kick-butt women entrepreneurs out there. Not saying we're ignoring the men. We know that the men are fabulous too. But I have to say, as a mom of 3, I know how hard it can be for us to manage the business and the family and, without losing your morals. So I'm super glad we're about talking about today's topic, because I know this is something that is one of those things that a lot of us, especially women, we tend to have a little hard time valuing ourselves, because we often value what we do based on our bottom line. So I know you're going to give us some tips. So I know I have, there's certain things I know that I want to know for myself. Like, I've never been a math geek and I've never really enjoyed, accounting. So I'm sure you have some great lessons for us today.
Yeah, I do. And most of them focus on ways to reduce the number of tasks that you do each month and reduce the number of financial decisions that you make, because we all get decisions fatigue. And I feel like the more things that we can automate and set up in our system and not think about every single time it happens, the better.
Okay, awesome. Well, I love that idea of automating. Just set it once and forget it, right? So we can get on doing the important things, like being wrong when, doing the things that we know we need to do. So let's break it down, because I'm very much a meat and potatoes. I know my audience love to be able to get actionable tips. So I don't know how many you've got prepared, but let's fire away straight into there. Let's start breaking it down. And perhaps we should have the first thing is, why do we need a financial system?
Well, it's one of those things that we can't do without. When we talk to people about changing habits, changing your behavioral habits in your life, it's more like food than like, quitting smoking or quitting drinking or something like that, because you really can't operate within the normal system without spending some money. So when you're trying to get out of debt, it's not an all or nothing kind of system. Like, you still have to pay your bills. You still have to do all these things. Just like when you're trying to lose weight, you still have to eat something. So you're constantly making money decisions every day. So my big aha moment was in 2011, I read Ramit Sethi's book, I Will Teach You to Be Rich. Have you ever read that book?
Yeah, I haven't read the book, but I know I've been part of his online course. He's great stuff.
Yeah, me too. And so I have to admit, I had a hard time buying the book because of the title. I felt like, who is this kid with no shoes?
Right?
Yeah. So he's younger than I am, I think, and he's on the cover of his book wearing no shoes, and he's telling me he's going to teach me to be rich. So I thought, my first impression was oh, that's really arrogant, and I don't want to be seen reading this book. It's kind of embarrassing. But his idea of automating things, it never occurred to me to call the companies that I pay money to and ask them, say, I want to batch my bills so that they're all due on 2 days out. Like, I do 2 days out of the month is how I do it. This is one of my tips, is to batch your bills. I do the 5th and the 20th of every month. So I call all the companies that I pay and I say, I want to have my due date be on the 5th and the 20th. So I know that those 2 days are kind of when I split everything. And I try to make it even. So I do my mortgage and a couple bills on the 5th and then everything else on the 20th. So it's kind of roughly split those regular recurring bills. And then I go into my bank and I automate all of them. And the other thing Ramit did for me with that book was the idea of negotiating with regular bills. It just never occurred to me to call and ask for better deals on all of these little things that I pay every month. And none of them save a ton on any one month, but quite a few when I call that was $10 off one phone line and $10 off the other phone line and then a free
cable it's typical. I didn't realize that every 6 months they kind of reset your account, that you have to phone them and say, well, I don't really want that, and they're like, oh, well, if we give you this bundle you can still save, and I've got more services for less money. So I was like, oh, dang, I'll do this again.
Yeah, and like realizing that kind of across the board, calling and talking to people. And I do it about once every 6 months, like you're saying. I put it in my calendar and I call these different things. And it takes a couple hours, but if over the course of the year, it saves me several $100s in several different categories, I figure it's worth it. You know, that's kind of like what you would be paying in interest, or it would be a couple car payments, or, you know, it makes, I think it works out. But the batching and then automating those main ones, that takes a lot of the thought day by day throughout your month. Like, oh, wait, what day is the car payment due? Do I have enough money in the account? If you don't have them batched and scheduled, you have to keep thinking about it and checking your account and making sure you don't spend too much before that day comes.
And then you stress like when you overpay and you get like a bank like overdraft fee and you freak out because you're like, oh my gosh.
Right. So the goal of batching and automating is to completely avoid overdraft fees and late payments because they get paid every month. Another thing that my husband and I do is we have a separate bill pay account. So we each have our own spending accounts that our paychecks go into and that our commissions from self-employment and things like that go into. And then out of those, we both pay a certain amount into our bill pay account every month. And that's where it's automated. So that's the only one that I have to make sure never runs out, because that's where the auto bills are coming out of. And that's where we would get into trouble if it dropped below a certain amount. Like you'd have a cascade of overdrafts. So if you make sure that one has at least a month's buffer in it and you know roughly what goes out every month, you can make sure that you really don't, you have to monitor, like you can't quite set and forget it, because sometimes bills get extra high, you know, your heating bill in the winter may be way higher and your cooling bill in the summer gets way high. But you don't have to think about it every day. Like once that bill goes out and it's paid for the month, it's off your mind and you don't have to, it's not a decision that you have to make. And then both of our spending accounts, we don't have to talk to each other about what we spend out of those. Like he's a record collector, and as long as he has enough money in his account, if that's what he wants to buy that month, then that's more important than other things to him. You know, we've already paid for our joint stuff together out of our bill pay account. And if I want to, you know, I dye my hair or whatever it is that I want to do out of my account, I can do that as long as there's enough in that account. So it gives us some autonomy. It gives us each, you know, our own money to spend that we can do whatever we want with, making sure that our household bills are always paid.
Okay. Some great tips. So that's, I mean, even with the personal, and the thing is, even though like a lot of us are entrepreneurs and business owners, you know, it's very hard to focus on making money and, you know, getting business in the door when you stress about cash or you stress about bills. Like, am I going to be, because then you start to make decisions that are under pressure that maybe will not be the wisest thing. So, and I definitely think, you know, if we can get a handle on our personal spending and financial systems, it definitely helps bleed into our business. So, I mean, the same thing with business, right? Whether it's subscriptions, okay, not every subscription you can negotiate, but same thing there for automating that.
Yeah. And one thing that we've done as well, and lots of entrepreneurs, you know, when you're trying to figure out how much to pay yourself out of your business, we actually take one of our businesses pays a salary. It's our family business. We manage our family ranch. And so that salary covers all of our personal expenses month by month, and we get 2 paychecks a month to cover all of the basics. And then the other businesses we take profit shares from and draws, but not as regularly. So when people ask, like, how much should I pay myself? I always think, well, what is your baseline need in your personal finances? Like, what I talk about 4 levels of goals. So your sustain goal is what keeps the lights on and the engines running. Like, what's the very basics? If you had to cut all the extraneous stuff out, how much would you need? And then the next level is maintaining your lifestyle, which is things like eating out and getting your hair dyed and, you know, going to conferences and eating out with friends, things like that. That's kind of maintaining your lifestyle. And then we have the next level and the dream level, you know, the far future goals that we look at. And so I help people set up their saving systems to kind of go towards those different goals. So if you're trying to leave your W-2 job to go work for yourself, at the minimum, I like for people to try to be bringing in that sustain level before they quit their other job, to know that they won't have to move or, you know, make some drastic change in their life because their income drops. So if they're at least making that sustain level and they have a few months saved up, hopefully, then when they transition to be full-time self-employed and they're now focusing, you know, those daytime hours that were going to their old job on the new job, like, you can feel pretty confident that you'll be able to get the growth in to get to the maintain level if you've already covered the basics, the rent, the food, the electricity, things like that.
Okay, great. So we definitely can make some decisions there. So, and I know depending on people's situation, I mean, all of us are in different financial boats. Some of us, I mean, my husband and I moved from South Africa to England, what was it, 12 years ago, and we got into major credit card debt, and it was just such a stress because we couldn't figure out the beginning to the end, and then once you get into that cycle. So let's just attack this for a second, because I think this is something a lot of people think about, like credit cards. Okay, sometimes you need to use them because you aren't getting money now, especially from a business perspective. What is your view on, say, these cards you can get like cash back, there's no interest. Is that a better way of managing your financial cash flow, and then, like, say, paid off at the end? Or what's your view on that?
Well, it's definitely a tool, and it really depends. One of my favorite places to go to look for the best rates on credit cards, there's a place called nerdwallet.com, and he regularly reviews like the best rewards cards, the best 0% interest cards for balance transfers. So I do think that there are times in businesses when cash flow is a problem, and I have talked to people who especially like in the run up to a big launch or something, where you're building towards something and that the income's coming, you have a big enough list, you understand your conversions, like you're expecting a certain amount of sale, and you have this debt that's kind of weighing on you from all the buildup. There have been times when I've talked to people about doing a balance transfer to a 0% card. There are things to look out for, though. You have to make sure you understand if there's any fees, like is it a 0% on the interest, but there's a 3% on the amount that you transfer. You need to know, like, how much would that be, and is that really a better deal than keeping it on the card it's on right now for a few months and paying it off as you go. My favorite app right now for paying off debt is called Ready for Zero. However, I have this group called Mastering Money Matters, which has quite a few women in the UK and in Canada, and it appears that it is not available everywhere, but I'm hoping that they are going to expand. I believe they have plans to expand. Another website that I use to help people calculate debt is bankrate.com. If you go onto bankrate.com, they have several different calculators. They have credit card calculators, mortgage calculators, car loan calculators. And then they have one calculator that's basically like all of your debt calculator, your life calculator, where you can put in your mortgage and all those different things. You can put in the percentage rates, and that, if it's a mortgage, how long is left on the mortgage. So you can really see over time how much interest you're paying. My favorite thing about Ready for Zero is that it actually has a really lovely way of graphically displaying when each of your debts will be paid off. Like, you go in and you create a plan. They help you to avalanche it as opposed to snowball. So the difference between snowball and avalanche: snowball is you pay off your smallest balance first and then roll that balance into the next biggest one and the next biggest one. Avalanche, you go for your highest interest rate first. So avalanche really saves you more money in the long term because you're paying less interest overall. And that's what Ready for Zero does for you. But it also shows you right now on your current debt how much interest you're paying every day. So that's a really interesting amount for me to look at with people, because I don't know if you ever read The Automatic Millionaire. I think is it David Bach that wrote that. He had this whole thing about the latte. So he was trying to tell people.
Sorry, you broke up a second. It's the what? What does he call it?
The latte factor, and it was in the book called The Automatic Millionaire. So what he wants you to do is find something like your daily latte and muffin that adds up to $10 to $15 a day that you can cut and then put that into savings. My issue with that is when I've heard him interview people, it's almost always women cutting something that's pleasurable out of their lives. And I think sometimes we need that daily latte or a drink with a friend or something like that. So I prefer to really look at things like getting your interest rates down, getting your credit ratings high enough so that when you buy those big things, like the difference between a 600 credit score and an 800 credit score is going to be $15 to $20 per day over the 30 years that you're paying off your mortgage. So having the higher rate, having the lower rate and the higher credit score, things like that can really make a huge difference. So also looking at that amount you're paying every day to interest, you can see that, oh my God, once I pay off these credit cards, like that $15, $20 a day, that's mine. Like right now I'm paying that to interest, which is nothing. Like I'm paying it for things I've already bought and probably consumed and maybe don't even own anymore. I may not even have that handbag anymore or that really fancy meal or whatever it was. So I find it really really encouraging to get the debt paid off when you see, oh my God, every day I'll have this extra $10, $15, $20.
I love that idea of making it visual, because I'm a visual person. Like, if I can lay it out and I can see, because I think a lot of the times we have it in our head, or we're calculating. Like, I have an app I use, we use Mint, it's an online app as well, which is good too, as long as it gets some kind of handle. Because definitely, it just, at least having some way of calculating, knowing where you stand, makes it easier for you to know what you're aiming for. So everyone listening, just to remind you, let me just mention that here at Mimika TV, our guests kindly give away a goodie giveaway. And this is awesome. This is why you want to listen to the end, because pay attention to what Jen has to say, because at the end, I'll ask you a question based on what she told us. And usually it's something pretty easy, like a word or two. She uses a concept. And the first person who's going to be able to type the correct answer into the comment section will win her giveaway, which is the Financial Foundation Lab bundled, valued at $57. Now, is this a course, Jen, or download?
Well, it is. It's part of the what I do for my Money Masters group, my Mastering Money Matters. Each month they get a lab, so it's basically like a little module of the course. And the foundation is the first 3 months. So it's debt reduction, treasure hunt, finding the hidden money in your world, and then automation. So it walks you through all the steps of automating your finances, all of this batching and scheduling that I was talking about, and then getting them automated. And one of the steps is tracking with something like mint.com, because I do feel like, while I don't want people making major financial decisions every day, like, it would be great to take as many of those off your plate, plan them out, put them in the system so that you don't have to think about all those things every day. I do think it's really good to check in on your money every day and see what's there. It's kind of like having your finger on the pulse. And it can make you feel good. Like, I've seen studies where they say that people handling actual money creates, I don't know if it was serotonin or dopamine, but there's like a little bit of a pleasure center in your brain from this feeling of abundance, of like looking at the bank statement, of knowing what's there. And while it's true, it can make you kind of, if it's not where you want it to be, it can kind of like, but it helps keep it in mind when you go to make that purchase, or when you have an impulse buy, like, you think about what's in your bank account. And I recently did a junk spending episode on my podcast where we talked about actually taking like a little Post-it note. If you spend with your credit card physically a lot, put a little Post-it note on it that says no junk, just to remind you when you go to pull it out and buy something extra that you weren't planning on buying, like, oh, wait, like, my bigger goal is in mind, that I want to get a down payment for a house, or, whatever it is you're working towards. And in Mint, they allow you to put in those goals and see your progress towards those goals. So I think it's a great idea too, if you resist buying something that you might have otherwise bought, like, go transfer that money into your goal.
That's some great tips. So, because it's almost like taking that mindless spending. Oh, it's just $5. Oh, it's just $10. By the time you add it up, for me as well, like at the grocery store, because I have 2 teenagers and a 5-year-old, and they eat me out of house. No, we eat our money, literally, because it's so easy when you're there and you're like, if you're not thinking of a budget, oh, we'll just grab this, and oh, that looks cool, it's $2.99. By the end of it, you spent like an extra $50 that you're like, okay, what did we just buy here? And 3 days later, you do it all again. So that's a great way of being able to list it. So how would we say, what would another big tip? So we know we're talking about managing it by knowing what your credit card details are, keeping an eye on it. What are some other tips that we could say that are perhaps, because we talked a lot about saving, what would you say is a great way to sort of maximize your income? Is there certain things that you should be doing?
Well, one thing that I like doing with our credit cards is, so I talked about batching, like having everything paid at the same time. One way that I do that for all these little expenses, like my MailChimp account and my Acuity account, and all these little things, is that I have a Chase Sapphire rewards card, which has fantastic points, and I run all of those little recurring things through there, and then I just pay. I moved the due date for the credit card to the day that I want it to be. And it doesn't really matter when all those other little things are due, because they get collected, they get batched by my credit card, and they run through every month, and every month I get so many points. So that's something that helps me to use my spending. And I put it on pay balance in full automatically. So I keep an eye on that balance so that I know what it's going to be. And if I do have something irregular or unexpected that's higher, I do have to make a transfer to cover that. But because one of our businesses is record label and we do manufacture and we keep inventory and stuff, I run our manufacturing through that too. Which means, it's money that we would be spending anyways. We pay it off in full at the end of the month. I'm not spending money that we don't have, but I'm getting the extra points for those. So we often travel for free. My husband's from England. He's British. So we go see his family. And we very rarely pay for those flights because we always have these points running through.
Oh, awesome. Well, my mom's visiting from England. She's in the room next door. She was enjoying the cups of tea. She lives in Yorkshire in England. And that's great. That's a great way if you know you're going to be doing things like that. Like I've got the same card, but I prefer the cashback because I know it'll automatically take a chunk of change off the balance. So either way, but yeah, it's amazing how when you start to add up those little things and you can start to maximize where your money goes. So give us another tip. What's another thing that you see entrepreneurs, some mistakes that they make that you feel we could overcome?
Well, I actually have another batching tip that goes with it. So you're already batching your automated bills, things that you are recurring every month. So then I also make a physical inbox and a virtual inbox, and I batch those as well. So other bills that come in, I wait to pay them until the 5th and the 20th. And I also make lists of things I want to buy. Of course, groceries, you may have to buy more frequently than twice a month. But anything else, if it's like, I know my printer's running low, I'm going to need more paper, but I'm not quite out yet. If I'm going to need, if I'm looking at a course, if I'm thinking about something, I put it in that folder. Like if I get an email about something and I'm like, oh, I might want to, actually, Bushra just had a fantastic mass persuasion course, and I put off buying it because I wanted to make sure I do it. So if you put it in that inbox and wait until the 5th or the 20th to process it, a lot of times, you can compare it to all the other things you're thinking of buying that month and be like, so often if we get out of that impulse moment, we don't buy it. Once we stop and think about it. So having and the other thing that it does is you've just paid all your other bills online. So you check your balances, you know what's going out, and that's when you then write any checks you need to write or pay any PayPal invoices or do things like that. And most people and most things have either net 15 or net 30. So by paying twice a month, you may not be paying the very day you get the invoice, but you're paying it regularly. And people who you work with regularly will know, oh, okay, if I send her the invoice on the 1st, I get it paid on the 5th. And actually you're more reliable that way than if you were just paid some things immediately and then we're like, oh, I'm waiting for this other payment before I pay this other thing, and then it gets put off indefinitely.
Yes, so it's kind of opening up a lot of tabs and like, oh, wait, what was I doing again? Squirrel! I have that problem a lot of the time. So now, I totally wholeheartedly agree. So for those who've recently joined us, we've been talking about how to really take control of your money. We've talked about batching using programs. If you go back in the comment section, we've added some great tips and links that Jen has kindly mentioned to us, so you can go and use these online tools and to batch your payments, make your life a little easier. So how would you say in terms of we talked about saving and debt. What is your views on sort of maximizing your income? Like how would you advise like someone who's looking at different options? How do you choose what is the best way to sort of invest in your time? Because I know for myself, I speak to a lot of women entrepreneurs. A lot of us have a problem with charging the right amount of money and saying, well, I can't charge that because I'm not worth it. And who's going to pay me for that? How would you sort of help us on that side?
Well, one of the things that I found really important in my life with running a couple of different kinds of businesses is having multiple streams of income and figuring out which streams appeal most to the people who most want to work with you. So, for instance, if you only have really high price packages, but you have a lot of people who resonate with your message who aren't quite at the high priced package level, it might be really helpful to either do an evergreen kind of program where you build it, but you don't have to be interacting every day, so it doesn't need to be at your high priced one-on-one level, or have some sort of subscription model, a monthly membership site where you're in there, like they know when you're going to be in there answering questions and they get materials from you, but it's a one-to-many model instead of a one-on-one. Or even doing something that's even more low priced, like an ebook, like, ways to get people coming into your world that may not be quite as high priced for them and as high risk for them. But then for some people, particularly if you're sort of in luxury and the high priced, retreats in Bali and those kind of things, that may not be worth your time because those people who are kind of interested in very low price things may never actually come to those big, it really depends on what your focus is. So I think looking at your focus group, the people who respond to you and what they want. I mean, a lot of times it's so worth doing a survey. It's so worth asking people what they want in groups, finding out more about the people who are drawn to you and your message.
That's some great advice. In actual fact, I'm busy reading the book. Where did I put it? Ask by Ryan Levesque, which is actually about, or Levesque, should I say, asking your audience, what is it that they want? And I have to totally agree with that a lot of the time is you have that view that, oh, well, I only want to create this one product. Yes, it's great for branding and marketing, but sometimes you might think that, well, maybe not everybody wants, say, 10, as in a course, an example. Maybe not everybody wants to learn or can afford to pay for all 10, but maybe they want to learn like one module. And part of what I'm doing in my strategy as well is breaking it down into pieces, because just like you mentioned, we want to create multiple ways of income, because personally, I do not favor the launch, like once a year launch. I don't know. Some other people with big lists can do that, but I've got kids to feed. Like, I need to make sure that I can bring an income on a monthly basis. And so everything about, creating something that's easily consumable, courses, ebooks, downloads, membership sites, those are all fabulous ideas. So I totally agree with you there. So what are some other tips that you have that are obstacles that usually you help women break through?
Well, as we were just saying that, I was thinking of kind of these two different levels of people that I've worked with. And I have had some sort of higher price clients who are moving from big things like one client wanted to leave her law practice and move to this new, very, positive change focused group that she's been running. But that's a big switch. And we're taking quite a few months to figure out her finances and making that switch. So on the one hand, I've worked with people doing things like that. But then when I did a bunch of free calls last year, I had from February through May, I was planning on building a course, which I was planning on doing a launch for. But during the course of the free calls, I realized that a lot of the people who were interested in what I had to say were not at the level for that course yet. It was going to be fully just business finance focused. And a lot of them really needed some personal finance steps first. Most of them were self-proprietors, had not made any sort of LLC or business entity yet, really didn't understand what they needed to do for their taxes, how to set aside quarterly taxes, didn't have an accountant yet, and just, really, they were wanting to start their own business, or they had started it, but really just didn't know what to do next in terms of where their money went. And that's why I ended up forming my much lower priced Mastering Money Matters group. And because a lot of it's dealing with people who already have some debt, especially people who are doing, they've been doing these different coaching programs like B-School and Clarity Clients in Cash or Zero to Launch. These are kind of expensive programs, and people put them on their credit cards and anticipating income coming in, which while all of those programs are great and do lead you to income, it still takes time to build your list and your audience enough to the point where you can get those conversions. Like when you look at a 1 to 5% conversion from your list, if you want to have a $100,000 launch and you have a $2,000 product, you need 5,000 people on your list. Or you pay Facebook ads to get those 5,000 people. And if they're not warm leads, if they don't know you already, it's going to be really hard to get anyone to buy a $2,000 product from you if you're not Marie Forleo or Ramit Sethi. So kind of understanding all of those things made me decide that I didn't want to be charging hundreds of dollars or even $50 a month. I charge $20, it's $19 a month for my monthly group, where we walk through okay, let's get a plan for that debt. Yes, you do have to invest in some things and learn things and get a website and figure these things out. But we can't just assume you'll pay all that debt off in 3 months with a massive launch. Let's make a plan for that debt, and let's make a plan for the conversion rates that, how big is your list right now? What do you need to focus on? Is list building the biggest thing before you need to be focusing on things like building courses, which cost money? Let's get some clients in the door. Let's get some almost everyone who eventually launches a big course like B-School did one-on-one work first. And that's really where they learned what their audience wanted,
Definitely. So, I have to agree with that. And I've done it the whole backwards. Seriously. The first couple of launches I did, I was like, oh, they're going to want to know this. I'm going to go and do this. And eventually I find it's weird. Human nature is we don't want to admit when we don't know something, but we know when we need help. So we go out looking for something. And the funny thing is, if you find a solution and maybe some part of it resonates with you and some of it doesn't, human nature is to say no to the whole thing. So we basically throw the baby out with the bathwater. Even though there might be something we know we can learn, we'll rather back off than buying that course or signing up for that coaching or whatever it is, because we kind of feel that maybe it's not going to give me that one section. So I have to agree with you that, breaking it down into making it easily digestible. And I think nowadays as well, people are very, I'm sure you agree with me, Jen, they're very specific and they want specialized information. So if you can be very specific, same thing about our, talking about our mastering our money and having the right systems. If we know we can definitely maintain that and stay on top of the little things, it'll make all the little $20 that you earn every month will eventually add up and end up being a big chunk of change at the end of the year.
Yeah. And another thing I'd like to recommend is the book called Profit First by Mike Michalowicz. Have you read that book?
No, I need to. I'm going to put it in the section. That's Profit First.
Profit First, yeah.
How do you spell these last names?
Oh, gosh. I think it's close to Michael Owitz, but let me just check on my I use audible.com and listen to yeah. And then if it's a book that some, especially finance books, some of them you need to actually get the real book because I try doing the downloads. They have like charts.
Yeah, you want to fill those things in.
Yeah, so sometimes I end up buying the audiobook and then buying the actual book. So Mike and Michalowicz is Michalowicz.
Hold on, say that again. Michalowicz.
Mike Michalowicz. And he's done several other books like The Toilet Paper Entrepreneur.
Oh, yes. Okay. Yeah, I remember that. Yeah, I love The Toilet Paper Entrepreneur. That was cool.
Well, and what I really like about this book was, so those early books, he was building these businesses that were very focused on rapid growth. And rapid growth often is not necessarily the most sustainable thing. And that's what he eventually learned from selling off some of these businesses and then investing in other businesses. And he realized what he learned to do really well was put these startups on a rapid growth path to where they looked good enough for someone to buy them. But some of them imploded after he sold them because the way the rapid growth goes is sure you can show this line going up on the chart that we have this rapid growth, but depending on what business model you have and what revenue model, you could also be greatly increasing your costs along the way. So this is what he learned from some of those lessons and how to, rather than figuring you'll make your profit when you sell or when you have an IPO and go public with your company, this is how to start taking profit really early in your business, hopefully right from the start. We all have some startup costs, whether it's building a website or opening a physical shop. Most everyone has something they have to pay up front before the money starts coming in, but really validating your idea with sales as soon as possible. And then this is the thing from the book. Equation. So he said most people think sales minus expenses equals profit. And he flips that around so that profit equals expenses. And that sounds
Jane, hold on a second. We have some internet problems with your audio. You're breaking up every 5 seconds. I'm going to leave the window open. Do you want to just pop out a second?
Okay, I'll pop out.
And come right back in. Call back in. I'll keep it going. So while Jen does it, let me answer a quick question. So Kim, thanks for your question. You asked, do you have any list building tips? I'm having trouble getting targeted traffic to my option. So that's some great ideas, but it's probably not on topic of what we're talking about today. We really want to talk about, the financial part of running the business. I do have several interviews that talk about opt-ins, but just as a good example, I'm busy testing Facebook ads. If you've got an opt-in page, you want to drive some Facebook ads just to really see, you can have a very targeted list, and you can start with $5 a day. It doesn't have to be expensive, and you can start to tweak it. But this is an example of something that I found. Let me just see here. Let me open that there again. One of the mistakes I made was that I actually just created something hoping everyone would join me, but I didn't test them first. So I would definitely say, Jen, I'm just answering Kim's question. I'll definitely say, like Jen mentioned, is to survey your audience and just ask people, even if you get on the phone with maybe 10 people who are on your list, you don't have to have a huge list, to really find out what they want first and then create an opt-in. And this is something I'm doing myself personally over the next couple of weeks, is tweaking my opt-in so it actually appeals to the audience instead of me giving them what I think they need. So yeah, so there you go. So Jen just read, so sales, so just reverse and let's go back to the beginning. So you said sales minus expensive equals profit, but what it should be is what?
So his new paradigm is sales minus profit equals expenses. And how he does that is he takes the profit off the top. So you have your income, your gross income every month comes in. you set aside your taxes first because everybody has to pay taxes. And then you take the percentage of profit that you've decided upon. And he has some ways to figure that out, some different equations based on whether you're product-based and have manufacturing costs or whatever. And then what's left over is what you pay your expenses with. And if you don't have enough money for your expenses, you either need to reduce expenses or increase your prices and keep on making profit. And I was like, it was like this light struck my brain when he said that. It never occurred to me. Honestly, in our businesses, I usually figured out what profit we made at the end of the year when we closed out our books and went to the accountant and talked about it. And he would be like, oh, hey, you made this much profit this year. And sometimes I could see that reflected in bank accounts, and sometimes I really couldn't. Sometimes it'd be like, oh, where did that go? The idea of having a separate plate. So he does a small plate system so that you don't eat all your profit. So you have your plate for taxes, your plate for profit, your plate for operating expenses, and your plate for salaries, which depending on whether you have other people working in your business or not, your salary may just be you. But he wants you to pay yourself your salary and separate your profit as well. So he was saying, if you have a business that's been running without a high profit margin, start with just putting maybe 2% in that profit account. And it really does take a lot of people too, the way that we've ended. It took me a while to adjust to this as well, but right now, this month, I'm spending last month's money, and I let the gross income accumulate on the last day of the month. So I have my 5th and my 20th are my financial days. And then the last day of every month, that's when I make my tax transfer and do things like move money into the profit account and the salary account. So,
definitely. Those are some great tips. So kind of like knowing. So for those who recently joined us, just to give you a little bit of a synopsis and what Jen actually mentioned, and that's why I recommend you watch the replay, is she talked about the batching and why it is important in order to, and also to negotiate your expenses. You don't have to just pay what you charge. Like things like cable account, I never knew you could phone them every 6 months to renegotiate your package, because a lot of the time we just think, oh, well, this is what this costs, so I just got to end up paying it, and then you end up left with nothing because you end up spending so much. So, and even bundle deals, like sometimes putting things together, or even paying in advance, like a year subscription to something. Usually a lot of places give you like 2 months free. Like a lot of these software programs, like automated software programs, I've noticed if you sign up, you are able to get those 3 months. So those are definitely some great tips. So welcome. We got Janet Kefadar who just joined us, and we got Kim Harris who's online, Jeanne Barkham, Taylor Dean, Transform Mindset, Jeff Adams, Stacey Clark, and who else? Heather Lynn Darby. So thanks for joining us. I know you are still listening. So just to give an idea, here at Mimika TV, our guest kindly donates a goodie giveaway. And Jen's giveaway for today is the Financial Foundation Lab bundles valued at $57, which will help you go through all, not all, but a lot of the stuff that we've covered today, which is a great download. So here's the question I'm going to ask you. Jen talks a lot about putting your things together. What is that word she uses? That you've got all your expenses, and she bleeps them on the 5th and the 20th of every month. What does she call that when you put all your bills together? Starts with a B. Like, dun, dun, dun. First person to type that into the comments with the correct answer claims today's giveaway. So come on, ladies. I know you're all listening. And it, really, it's a concept of putting. Instead of just having bills go out willy-nilly, and then you get sticker shock when you find out, what's it, Handle Life Coach, almost, it's kind of the same as that, but it's with a B. I have to have it official if you type it in there. Similar to, I think it might be just a, there we go. Janet Kefardar said batch. Okay, there. So we have to be official to make it fair. We physically have to see it in the comments. So it might have been a typo error there, but well done. Congrats, Janet. Let me write here. Congrats, you won. So please get in contact with Jen. So how would you like Janet to get in touch with you, Jen?
I actually know Janet. So
okay.
We are friends. Janet, do you want to just Facebook message me, and I will send that bundle over to you?
Woo-hoo, congrats. That's why it pays to pay attention, and it pays to be live here on Mimika TV. And this happens every week. And in actual fact, today I have another show coming up in 15 minutes. So we usually have 1 or 2 a day on one or two on Thursday. So if you stay online here, you'll definitely have another chance to win another giveaway. But congrats on that. And that is definitely a great tool that I think will be very useful. So just before we wrap up today, let's just give, if you had to, put it into one takeaway tip that everybody would remember you by, Jen, what would you say to our audience?
Well, I think automating as much as you can. That's what's made the biggest difference for me in my financial life, was once I got things automated pretty much across the board. I mean, there are always some things you have to end up doing by hand and think about, but I feel like it allowed me to look up from the day-to-day, client-to-client, paycheck-to-paycheck kind of, in the midst of all those little decisions, and be able to really start looking at bigger goals and bigger pictures and really expand financially what I was doing, thinking about other ways to do retirement programs and different kinds of investing. I just became an angel investor this year, which was really exciting.
Oh, wow.
My 5-year plan, and because I had it as a goal, and I had it a bucket that I was putting money towards whenever I could. I accomplished it way sooner than I thought I would have been able to. So that was really exciting.
Oh, congrats on that. That's awesome. And we need more of that kind of mindset of planning ahead. I have 2 kids in high schoolers and we have college fast approaching, and this mama is sweating. So I'm like, oh my gosh, I've got to get this sorted because I didn't plan in advance enough. But definitely some great tips. So what is the best way for everyone to get in touch with you?
Well, my website, I will type it in right here, is jenturrell.com. And that is my name, jenturrell.com. And there you can find my podcast, Financial Fluency, Speaking the Language of Money, which is my bigger outreach, kind of like you doing Mimika TV and Marie doing Marie TV. I feel like it's great to have one of these ways to communicate with people completely free on a regular basis. So that's mine. And then I also have my Mastering Money Matters group. And I write for several different places like Daily Worth. And all of that you can find at jenturrell.com.
Well, definitely. That's JENTURRELL.com. So make sure you go ahead and reach out to Jen there, and connect on Facebook, because I know you're on Facebook all the time. And for those who are listening, if you like today's content, click to subscribe to our show at Mimika TV, and you'll get live updates as soon as we go live. And then for those of you who want to get more help and tips on taking control of your video marketing, I'm known as the go-to video marketing expert. I have my own course platform called Video Creators Hub, but you can grab a free video toolkit if you go to my website, mimikacooney.com, and I'm going to just type it in there. And, like how to set up on Blab, like for today's interview, if you're wondering, I have the lighting set up, how I do all that, I'll share that with you. So go ahead and grab that. I have my own Facebook group as well called Business Class Marketing. And if you search that in the Facebook /groups/biz class marketing, you can join us there. And we always welcome our guests and audience to have a conversation after the shows in the group too. So if you want more information, make sure to subscribe today. Share this with your friends. If you know somebody who needs to hear what Jen has to share, click to tell a little bird, and our replays will be available here on Blab as well as on my website, on our blog at mimikacooney.com. So I'm going to say thanks to everyone for joining us today. Thanks for staying online and adding your comments. It's always great to have a conversation and have people join us. And I'll look forward to seeing you at our next one coming up soon. So take care.
Thanks, Mimika. Bye.